with the service providers, the traditional banks, custodians, audit firms, fund administrators, lawyers. It's really been a kind of an all clear signal that big major institutions can enter the space, and the corporate customers that we deal with who have never touched crypto before. This is a first entree into getting the benefits of the digital asset and distributed ledger technology without.
Starting off here, it's so funny that these outrageous price predictions on XRP get so much more attention than the accuracy that we deliver in this community. But I screenshotted the very bottom of the deltas in terms of the software that we have in this community that highlighted the most recent updated dark pools and deltas. And the lowest level right now that we have on our charts, because Kelvin had mentioned, do we see XRP's price dropping to 38 cents? And I said the lowest level deltas that we have right now are 44 to 51 cents. So I said, I'll leave this here just in case, right? And it got 21,000 impressions and people went bananas in the comments. So do I think that this is going to happen right now? No. Is it possible? Of course. But it would require a massive catalyst in order for us to get there, right? This year alone, we've seen tariffs, we've seen war, we've seen oil prices spike, we've seen dollar rise, we've seen interest rate hike scares, and none of those things were catalysts that enabled sub-dollar XRP. So in order for us to get to these levels, it would take some type of massive liquidity crisis, like a huge unwinding of the yen carry trade, some type of I don't even know what would, you know what I'm saying? Like, you just think about it logically. If war couldn't do it, if tariffs couldn't do it, if prices and oil spikes couldn't do it above $100, if dollar price skyrocketing in strength couldn't do it, then it would take, logically speaking, a huge catalyst to get us down to these prices. So what am I doing about it? Right now, obviously, of course, I'm capitalizing on discounted prices across the board in crypto. And right now, really all I'm focused on is assets that I can use to earn yield on. So I've been buying assets like XRP, XLM, HBAR, Solana, Metal, XPR, and I've literally just been earning yield on them by lending them out on the MetalX platform and literally taking those, daily rewards and then compounding them into loan rewards and getting even more money while the market's discounted. And what I'm waiting for with buy limits set on multiple different brokers and exchanges is those lower prices. So obviously, of course, like I said, I've been dollar cost averaging at current discounts because the market is discounted. And we have to remember that greed works in both directions. So are those lower prices guaranteed? No. Are they possible? Of course, anything is possible. Is it likely? Not in this current market environment. Like I said, we would need a major catalyst in order to get us there. And it doesn't seem like that's to be the case as of time of recording this video. But there are still some things lingering in the background, like the yen carry trade unwind, that could take us down to those lower levels. But we do have some levels to break before we get to those deeper deltas at 44 cents. And those are 91 cents to 68 cents, which are my primary targets. I have a lot of buy limits set at these two levels just in case. So that's kind of what I'm doing right now. This is not guaranteed, but it is possible. And that's just kind of what I want to leave it at. Coming over here, something that's making me optimistic is a report that one of the researchers dropped. I don't remember if it was Osmar or Break Free, so shout out to the researchers for this. But something that was highlighted in the July 2026 Signum report is it says here, geopolitical risk may now be largely priced in, which skews the balance of surprises to the upside and risk sentiment, which is good, right? If we can continue to see de-escalation, lower oil prices, and Iran and the United States getting along with each other, or coming to some type of ceasefire agreement, opening up the Strait of Hormuz, so on and so forth, that could obviously, of course, lead to optimism in the market. Not happening right now, still massive things lingering in the background and ongoing attacks taking place, but interesting to see that Signum thinks that the worst case scenario is already priced in. Then it says here, on-chain long-term holders and whales are accumulating across every wallet cohort, and the share of supply in profit and loss has converged, a pattern that has historically formed near cycle lows. So if we're not currently at a cycle low, it is possible that we are close to one, right? Just again, something to take into consideration for your own positioning, not financial advice. This was a video breakdown that the researcher shared the link for, which streamed live. And here we have a Ripple representative, Jack McDonald. And just listen to what he says real fast about how the legal clarity that we're set to get and have started to get has set the precedence and the tone for institutions to really start to come into this market at scale.
Are the primary factors, or is there anything else up there?
Well, I mean, it's been a bellwether piece of legislation for the industry writ large, and not to mention, obviously, the stablecoin industry, but I think more broadly, digital assets. I think if I could be as objective as possible, the stablecoins are probably the most unanimously thought of real world use case for digital assets, particularly for the skeptics. They can get their head around a stablecoin given how they operate. And for the US to codify that into law, I think is a major advancement. And I was touching upon earlier some of the non-US markets where we operate in. And I can tell you just from my own personal travels, that is a shot across the bow globally. And you're seeing other jurisdictions take note of that and really use it as encouragement to liberate their own markets with pro-digital asset legislation. So I can't underscore enough how important that is. Clarity is obviously the companion to that around market structure. And I'm an eternal optimist, so I'm still lighting candles and crossing my fingers and toes. But, I think particularly for the U.S., who was, arguably lagging behind, this was a huge step for not only the U.S., but as I mentioned, the overall market. And so I can see that the flow through to other participants in the ecosystem, it's liberated a lot of the buy side who are now more comfortable entering into the space using a stable coin as a companion to their, tokenized money market fund or RWA. You can see it with the service providers, the traditional banks, custodians, audit firms, fund administrators, lawyers. It's really been a kind of an all clear signal that big major institutions can enter the space, and the corporate customers that we deal with who have never touched crypto before. This is a first entree into getting the benefits of the digital asset and distributed ledger technology without having to,
Right. So he just said that this is giving the institutions that have never touched crypto before on the buy side to get comfortable to really truly flood into this space. And I mean, this is literally from 22 minutes ago. And I mean, just look at the market landscape, right? We have industry leading experts from Signum Bank writing reports saying the same thing. Geopolitical risk may now largely be priced in. On-chain long-term holders are accumulating. It says here the passage of the Clarity Act would be the next catalyst to bring the huge wave of institutional inflows. It says it right here down at the bottom of the corner. So now is not the time to be fearful. Now is definitely the time to be positioning yourselves, to be teaching yourself digital skills like trading, lending, borrowing, DeFi, to really just enhance yourself in this current market environment. So great stuff from this Key Rock share. Again, shout out to the CYPRX researchers for this. So moving over here to cover the updated dark pools and outlook on XRP as we roll over into a new business month and what took place during the month of July, because we've covered this extremely accurately the entirety of the month. Hopefully you all, if you're watching this publicly, have enjoyed that literally every single week, week after week, we give you guys these updates to keep you all level-headed as to what to be mindful of and what levels to be paying attention to. So the monthly high on XRP right now comes in at the dark pool at the $1.16750 level, which was the July or around roughly the July high. The July low comes in right now briefly above the dark pool at the $0.03799, which for now, if we can end the month above the last monthly low, which came in slightly beneath the dark pool, hovering briefly above the $0.006 threshold, slightly above a dollar, would be a good thing, because then we would see a higher low created after a month's worth of price action. Then what would be left for us to do is to see this higher low turn into a new monthly high, taking out July's monthly high in August and starting to make our way towards the June monthly high at $1.29, where we are going to need to see buyers put in a lot of work to break the passive seller that previously defended $1.29 back in June. So right now, with that being said, the bullish catalyst in case for XRP failing to break below $1.03 is a very good sign. As long as buyers can continue to defend this base from the previous monthly low, and the current monthly low sitting slightly above $1.03, then that could open the door for a meaningful recovery on XRP, at least back into the monthly high, where buyers are going to probably make another attempt like they did here mid or at the beginning of July, mid-July, and hopefully at the end of July, beginning of August, to break above $1.16. So $1.16 becomes the most immediate threshold for us to see and get excited of any higher prices on XRP, the digital asset. If we can break above $1.16, that is going to open up the door for buyers to come and make an attempt at testing the strength of the sellers up here at $1.29. That could throw up a passive defense depending on the market sentiment at that point in time. So right now, $1.29 is our higher time frame target heading into the month of August that we need to break above in order to get excited. We need to see buyers reclaim $1.16, turn it into support, engulfing the monthly high from July, and that would open up the door for a move up into $1.29. To the downside, actually, well, first, obviously, of course, if we do see any major bullish catalyst that takes price skyrocketing in the month of August, like some Clarity Act information, or I think it got pushed back to September, if I'm not mistaken. I don't track that stuff too much, to be completely honest with you. But that would obviously be a catalyst that could bring some optimism back into the markets. We also know, looking back at historic prices, if we go back to the total cryptocurrency market cap, what I also find interesting is time in the market. We go all the way back on the higher time frame on the daily to July, August 2024. That is exactly when the market started bottoming out, heading into September, October, November timeframe. And we are trading in that discounted environment at buy dark pools at 2.05 trillion, 1.84 trillion, and 1.71 trillion dark pools. So we're in that same time horizon where buyers started to become aggressive in those later months of the year and push price into new all-time highs for the total cryptocurrency market cap. So definitely something to be paying attention to if we can start to see a breakout above the $2.3 trillion threshold in the total crypto market cap. But still definitely some work that buyers need to put in order to get to those higher levels. So in an environment like that where we do start a major recovery, the levels above $1.29 and $1.36 to the upside are between $1.57 and $1.98. All right, we'll get to those levels, I'm sure, in future video breakdowns heading into the month of August. So for now, if we can see buyers put in some work, holding price above $1.0959, the next target will be $1.16, then above that, $1.29. To the downside, of course, any sustainable break and bearish close below or any major catalyst that creates some liquidity crisis in crypto, taking price below $1.03 instantly opens up the door for 91 cents, where I will start to heavily accumulate some XRP token. Below 91 cents, still on our radar, is that 68-cent threshold. And then just to throw in some extreme bearish targets, the lowest level deltas that we have right now come in at 44 to 51 cents, where just for some oh shit money, I do have some buy limits set at those areas. Personally, not expecting them to come into fruition, but if they do, I'll have some buy limits executed on multiple different brokers and exchanges. I would go outright and say that if we did see a liquidity wick down into those lower ranges, it's probably not going to stay there for a long period of time. So if you do plan on buying at those levels, not financial advice, I would throw in some buy limits or some buy orders on not just one exchange, because we know exchanges shut down and those liquidity events, but on multiple different brokers and exchanges if you have the capability to do so. Quick update on Canton real fast. We are still seeing the passive seller at time of recording hold price at that 12,361 dark pool. All right. So right now, heading into the month of August, if we want to see higher prices on Canton, our last update was when we were trading down here at this range, was that if buyers can hold the bottom of this range, we could see a sustainable move to see if buyers can test the strength of the sellers that passively defended at the dark pool. Not once, but twice after aggressively breaking it, where it previously acted as a support, was aggressively broken by a seller here. Then that aggressive seller turned passive and started passively defending. And now you can see, yet again, we have come up and made an attempt by buyers to break this passive seller, but have failed at time of recording. So if we can hold this base heading into the month of August, and we can see either a drop down into the base, a sustainable break above 12,361, turning into support, would then open up the door for higher targets on Canton. We could also just see a continuation move from where we're currently trading, where buyers break above the passive seller, retest the 12,361, turning it into support, and that would again open up the door for a much better recovery into the monthly high from July on Canton's price, which comes in slightly underneath of the dark pool at the 15.6. I would go outright and say that if we start to break back above the 12,361 and this passive seller gives way, that's going to coexist on the higher time frame 4-hour with the break of the 50 moving average crossover. If we can see those roll over, that would be a good sign that buyers could make an attempt at the July monthly high and push price back up into the dark pool at the 15.6 for our next bullish target. Right? But again, buyers do have some work to do. To the downside, of course, in a risk-off catalyst environment, if prices stay below the 12,361, that increasingly opens up the door for a much deeper drop on Canton. The first bearish level still on our radar is that 11,021 cent psych level. Underneath of that 9,453. And those are the two bearish targets and dark pools to the downside underneath of the 12,361. For now, I'm still in favor of the buy volume, especially considering the current lower inflation that we got, the less hawkish Fed, so on and so forth. But of course, paying attention to major catalysts heading into the month of August, we do need to be mindful of that. We do also, interestingly enough, coming aligned with last year, or not last year, 2024, we have the monetary policy decision from the Bank of Japan. And interestingly enough, if we come over to Forex Factory, I'm not saying that this is going to happen, but I just pay attention to detail. Back in 2024, July 31st, when the Bank of Japan surprised the market with interest rate hikes and the yen carry trade unwound, we saw these same fundamentals, right? You can see yen gain sharp moves, stoking intervention speculation. So, just be mindful. It's a possibility, not saying it's going to happen, but it's something that could possibly unfold, especially if the yen starts gaining unprecedented strength due to interventions or spikes in liquidity. And then on top of that, here was another gem shared. Now, this is from the podcast When the Shift Happens. So shout out to When the Shift Happens. This is a bit of a lengthy video, but this is from Dan Chappero and how he breaks down why he thinks crypto is so undervalued and where it could go to in the near future. So this I found to be very interesting, considering where we're at now, again, trading at the current market cap and where he thinks price could go. And it makes logical sense. Listen to what he has to say here.
You rebranded your company from 10T to 50T, 10 trillion fund to 50 trillion fund.
Yeah.
What makes you so confident that the crypto industry is going to 50 trillion?
Yeah. It's funny because I just did a short little 10-minute interview with a CoinDesk, and they asked me the same thing, and the guy basically said, isn't 50 trillion a little too conservative?
My next question is this: why 50 trillion and not 100 or 200 trillion?
Or whatever. So
or whatever.
Okay, yeah, right. Well, so the reality is that in 2019, the value of the digital asset ecosystem as we measured it, so the value of Bitcoin, the value of ETH and the alts, and the value of all the equity that existed in the blockchain crypto world in the middle of 2019 was 300 billion. Okay, and I've told this story many times. I probably told it to you last time I was on. And I said, okay, what do I really think, what am I playing for? What is the TAM, the total addressable market of this DAE? It's 300 billion. And I thought, well, I think it can go up 30x, 10 trillion. So that's where the name, 10T, 10 trillion. And I thought, if I don't, no one will believe me that was my view. Because it's an outlandish view. I've never had a call and said something was going to go up 30 times. Currency doesn't go up 30 times. I never called gold going up 30 times. So I said, I'm going to put my view into the name of my fund, which I think no one has ever done. I don't think anyone has ever done that. I mean, I thought it was crazy, but I'm like, I'm going to do it. And 10T, about a year ago, we got to 5T. So that was Bitcoin up near the highs, ETH, the alts, the equity. It all added up to around 4.5 to 5 trillion. So I thought to myself, okay, well, we're launching Fund 5. I can't call it 10T. That doesn't make any sense. What is that? That's a double from where we are. We're at 5T today. So I stepped back and I thought, okay, 10 years from now, this is 2025, 2035, what does the DAE, the digital asset ecosystem, look like? And I've already talked about Bitcoin going to $1 million in 10 years. That's 20 trillion. I think ETH and the other alts could be 10 trillion. So that's 30 trillion. And people say, well, that's too low too. I'm like, well, okay. And then I think all the equity in the space, so any business that touches blockchain or crypto, Web3 in some form can add up to about 20 trillion. Now,
something I want to point out real quick is you said, oh, people say that this is too low. Who are these people that he's talking about? Who are these people that he's in conversation with that are telling him that 10, 20, $50 trillion market cap in crypto is too low, right? Again, just think long term where we're at now and the opportunity that exists in our hands as retail investors for generational wealth.
that might be way too conservative. Coinbase is a $50 billion company today. I think Coinbase can be a $1 trillion company in the future. I think Coinbase is a generational, once, it's like a Microsoft type of company. I think Kraken also has that ability, but that's something separate. So I think 20 trillion for the equity and the businesses that use blockchain, the circles of the future. Right now we only have, 10 significant public blockchain crypto companies. I think they're going to be 50 to 100. So 20 for Bitcoin, 10 for ETH and the alts, 20 for the equity, adds up to 50 trillion. And so I thought conservatively, we can go from 5T to 50T. And, people said the same thing when I was talking about 10T. Well, Dan, it's going to blow past 10T. But the point is not to have some pie in the sky view. The point is to be right about your view. So I make it, it's a little conservative. And why would you say it's conservative? Well, look, stable coins. We invested in Circle in very early days. There were 0 stable coins 5 years ago. When I first launched the fund, didn't exist. And today, and last year, as you know, $33 trillion of stable coins traded. 33 trillion. So I have never seen anything, nor do I think anything has ever existed that has gone from 0 to 33 trillion in 5 years. And what's remarkable about this is that stable coins, those are only dollar-based. 99% of stables are dollar. Okay, we're going to have euro stable. We're going to have yen stable. We're going to have all the currencies. Now, total old world currency volume is 7 trillion a day. So we have 33 trillion in a year. That's 4 days of old world currency volume. Okay, so that 33 trillion is going to 300 to whatever, 3,000 trillion, whatever the number is, right, that is going to eat the old world currency. Now, another thing that also makes 50T, I think, likely conservative is, of course, agentic finance. We think that the number of blockchain, let's be clear, blockchain is the money of the autonomous AI agent, okay? AIs will not be calling up JP Morgan and doing a wire. I've said this. They be using programmable money, smart contracts embedded in blockchains. So AI agent money is blockchain. Okay. We think that within the next 5 to 10 years, that they're going to be not tens or hundreds of trillions. There will be thousands of trillions of transactions done by autonomous agents. Thousands of trillions. So is the value of those? What is the value of those transactions? Will they be 1/100th of a penny? Will they be a penny? Will they be $1? I think it's unclear. I think the volume that we've seen in the last 6 months is unbelievable. There's been tens of billions of transactions from 0 18 months ago. Tens of billions already. So, you look, I've said this before, this investment thesis about the digital asset ecosystem to me is the greatest macro investment, macro trade of all time. Right? The internet was the digitization of ideas and information in the 90s. Bitcoin and blockchain is the digitization of value and money. And de facto has to be worth more because it's about money, right?
So I'll leave it there for everybody to ponder on. And, if anybody's feeling doubtful in the current market environment, I really truly think that now, instead of being doubtful, is the time to lock the F in. Obviously, of course, there are still risks involved in this market. A market could see another catalyst where we see a huge downside move, liquidating some more long positions that sit, but at the end of the day, I think that should just be seen as an opportunity, not financial advice. I'll see you guys next week. All right. Blessings to you guys and gals.